Hey, how you doing? My name is David Duford, founder of BuyLifeInsuranceForBurial.com, and I want to welcome you to our special presentation today on what is the best life insurance for seniors over 70. So I take it that you're here because you yourself are a senior and you're over 70 and you're looking for some kind of life insurance or burial insurance or something along those lines and want to get the facts on what your options are, whether it's for yourself or for somebody you love. So let's get started and figure out how I can best help you with the educational material in this video. So let's start with an overview of what to expect on today's presentation. So first, if you haven't met me, I'm going to formally introduce myself as well as my company. And then we're going to talk about, right from the beginning, what the best life insurance for seniors are who are over 70 years old. I'm going to tell you what kinds of life insurance are available for seniors over 70. You've probably gotten all sorts of solicitations for a variety of different kinds of life insurance. My job, hopefully, is to dispel some of the concerns or questions that you may have to better clarify what type of life insurance is going to be in your best interest. Then we're going to talk about how much life insurance should a senior over 70 have. Then we're going to talk about how to find affordable life insurance for seniors, in addition to giving examples of rates and insurance companies for life insurance for seniors over 70. And one question I'm definitely going to ask as we go through this is, should you get the cheapest life insurance available? That's a commonly asked question. Many people I see are on a fixed income, and certainly they want to use a good, put their money to good work and not spend too much. However, we'll get more into that later on to help clarify why cheap is not always and shouldn't be your first concern. Also, you may be wondering on the flip side, well, because I'm over 70, am I going to have to pay more because of that? Again, we'll answer that question. That's going to depend on some variables of which we'll get specific later on. And then I'm going to answer the question of how to qualify for life insurance as a senior over 70. And then as well as figure out if you need to do an exam or if you can pass up on it and whether it's even required. We'll answer that. And then finally, we'll talk about the next steps to qualifying for burial or life insurance if you're a senior over 70. Okay, so again, my name is David Duford. I am the founder and owner of BuyLifeInsuranceForBurial.com. Basically, I help people like yourself find quality life insurance and burial insurance, especially targeted towards those looking for some kind of final expense life insurance type of options. I've been licensed as a life insurance agent since the year 2011. And in this short period of time I've done this, in my opinion, 7 years isn't too long, I have helped over 3,000 families with their life insurance needs from all walks of life in multiple states in our country. I've helped that many people. And I'm also a published author of 2 books. The one most likely to be something of interest to you is the official guide to buying final expense life insurance. It's where I talk about the different kinds of topics that we'll briefly discuss today, and how to help people like yourself find a plan or program that makes sense. I'm also, in addition to writing books and helping people out like you with their final expense life insurance needs, I'm also an agency owner. I actually train agents to go into their own communities and help people, generally speaking, 50 and older, find affordable and high quality burial life insurance. So not only do I actually help people, but I teach other people to do the same across the country, have hundreds of agents that do so. And lastly, but not leastly, as I always like to say, I am married, have been since 2006, actually 2008, and our 4th kid is on the way as of filming this video, so cross your fingers. All right, so let's get right to it. You are here because you or somebody you're looking for is over 70 years old, and you want life insurance or you want burial insurance, but you're trying to figure out what the best type of burial or life insurance option is available to you. So look, the thing is that best is what I call a subjective descriptor word. So basically what I mean by that is best is always relative. What's best for Joe Blow is different than Jane Doe, depending on their goals, because everybody has different goals and reasons why they purchase life insurance to begin with. Some people want to replace income when they pass away. Maybe there's a circumstance where there's a husband and wife. The husband has a pension plan that does not transfer to the wife upon passing, and maybe the wife only collects a small portion of monthly income on her own through Social Security. In that case, there is a definite need and reason to own an income replacement plan through a life insurance policy. However, that may not be the case for you. Maybe you just want enough to bury you. So my point here is not to tell you what you should get as much as to describe to you that your situation is individualistic, it's unique, and you need to figure out what circumstances are unique to yours in order to dial down and drill down and figure out what kind of life insurance option is best as a senior over 70 years old. So like I said, the main question we want to ask is, what do you want your life insurance policy to do for you? What do you want it to accomplish? And again, what this comes down to is that the best life insurance matches your goal. Figure out what that is. If you're not quite sure, think about all the things you want your policy to actually cover for you, and then imagine how much it's going to cost to do that, and at least arrive at some kind of expectation as to what you want to accomplish with the purchase of a life insurance policy. And at least that will get you started. Ultimately, it does help to talk to an agent like myself to help identify what your needs are as quantitative as possible, meaning down to the dollar, so you know kind of what kind of plan you're looking for, at least generally, or more on a more specific basis as opposed to general. So there's different kinds of life insurance types for different kinds of goals. You may have gotten and seen and heard of all sorts of different life insurance, maybe guaranteed acceptance life insurance, term insurance, permanent insurance, universal life insurance. And all of these are life insurance, but they do different things and have different terms associated with the contract of the life insurance itself. So what I'd like to do in this section is actually talk about the most common types of life insurance available and describe to you how they work, as well as who they would be appropriate for as a senior over 70. After looking at all the different kinds of life insurance products that are available, I have narrowed down the different options to 3 different types of life insurance available to seniors over 70 years old. Ultimately, this is what all life insurance products are designed around. Whatever you're looking at, most of the time it's going to fit in one of these 3 particular types of life insurance products. And like I said, these plans are good on their own design. In fact, it may be debatable that one product is better for another person depending on their unique circumstances, but I believe that some life insurance is better than no life insurance at all, even if it's not necessarily the best life insurance. So I'm not a purist in the sense that many agents are, and they believe this one kind is always the best kind. Something's better than nothing. But with that said, certainly with the knowledge that you have now, you certainly want to know what your options are so you can figure out what your best option is to maximize the benefit of a life insurance policy on you. And again, with the knowledge now, you don't want a plan that is a mismatch to what your goals are. Again, yeah, it's better than nothing, but if you buy this and let's say you want a burial plan and we don't know when we're going to pass away and this plan cancels in 10 years and you hit 80 years old and it's not there anymore. I mean, how good is that when you could have gotten something else that would have been had no cancellation provisions into the policy? So these are the things that I hope to show you and educate you on so that you can, again, make a better decision on what is best for you. So let's talk about the options to help you decide what's best. So first of all, the most common and most popular type of life insurance is what's known as term life insurance. This is something that has been readily available and has been sold by a variety of different insurance agencies, companies, direct mail order companies on TV. Most people know that have heard of at least what term life insurance. Now, the basic definition of term life insurance is that it is coverage that is provided to you over a set number of years before canceling or increasing in price. So let's talk about the pros of a term life insurance plan for seniors over 70. So first of all, most likely than not, although as you get into your 70s, especially in the later years, it is the best bang for your buck. And when I say best bang for your buck, what I mean by that is typically with term insurance, being that is designed to only last for a period of time of which you might outlive. Insurance companies usually, again, apples to apples comparison here, are usually willing to give you more coverage for every dollar you put in relative to other types of life insurance that would not cancel at a future date. So if you're just looking to cover a temporary type of obligation, term insurance is a really economical way to cover it. For example, let's say you have a mortgage. You've got 10 years left on your mortgage. and you're 70, and you want to make sure that lump sum is paid off if you die before the 10 years are up. Well, a 10-year term life insurance product would be a really good idea to consider. It's the cheapest way to get defined coverage for a particular type of obligation that may not be there after you outlive it. If you're a young person, I know if you're over 70, okay, you're young at heart, but you know what I mean, young by age, it's not a bad idea either, because it allows you to have a lot of coverage for a little investment. And if you die suddenly or earlier than expected, it leaves a lump sum behind to your family so they can subsist without having to the homemaker, say for example, to go back to work, get new job skills, and replace your lost income. So it's the best bang for your buck in the circumstances where it's used to cover, for example, larger debts. Again, a mortgage is probably the most common reason seniors over 70 buy a term life insurance product, because they want some portion of that covered. Sometimes they buy it because it's just the only thing they're going to qualify for that gets them the amount, because of the premium to coverage ratio is a lot more advantageous, despite some of its setbacks we'll talk about momentarily. Also with term insurance, one of the things I think is really important that you should do is make sure you buy a term insurance product with a conversion option. This is very important, especially if you think if you outlive the term insurance, but you may have a need for life insurance after the fact. What a conversion option does is that upon requesting and enacting the conversion option, it takes a portion or all up to the amount of coverage you have in most circumstances and converts it into a permanent policy that doesn't cancel because of age or health, or the rates don't go up either. So it's a good plan B if you reach the end of your term insurance and you need to have some kind of coverage for just, let's say, a $10,000 burial. And the conversion option will allow you to convert your term to a permanent policy without evidence of insurability. So let's say you're 80 and you're on your deathbed. You can convert this, and at least you have something, as opposed to possibly outright losing it altogether. Now, one thing you got to be careful of is that sometimes these term products don't have term conversions for the entire length of the term insurance. A lot of plans I've seen have term conversion privileges that cancel before the term insurance is up, especially as you get into your 70s. So it's something you got to be very aware of. In a case in point, I helped a client in South Carolina the other day who had a term insurance policy, and they went to try to convert it. But because they're 72, 73 years old, their term insurance conversion option canceled at 70. And so they've had to go out to market and work with me to find a new plan, since they missed the cutoff date for the conversion. So there are policies that have conversion privileges at any date of the term policy. It's just a matter of figuring out which of the plans are out there and available and taking advantage of it. And I can't stress it enough, especially in your 70s or above, it's really worth having that privilege. So what are some drawbacks of term life insurance for seniors over 70? So this is the big issue, and it comes down to goals. Term insurance is short for terminating insurance. So what happens is that if you outlive your insurance, you don't have insurance. And the question you must ask is, if I outlive the insurance, am I going to be in a position where I don't need it? And if you answer no to that, then you should be. If you answer that you will need it or a part of it, then you really need to reconsider if term is the right solution. A case in point, I was working with a client, or actually an agent in Florida. He came across a couple living on the East Coast. He has a $3,000 a month pension plan from the government, and but as he signed up for the pension originally, he opted to take the most retirement out, and in exchange for not being able to pass that along to his surviving spouse. Well, the surviving spouse only makes around $1,000 a month in retirement, and they have very little savings. But they live and subsist on a $4,000 a month budget. So if you take his money out of the picture because he were to pass away, that would leave the spouse $1,000 to live on with a $4,000 a month expense budget. Not a good scenario, right? So his option was to get some kind of life insurance policy to replace his income, so a lump sum payout to the benefit to the spouse to help her get through not having all that money. Well, the problem with him was that even though this is a permanent problem, it was a problem for him to come up with the premium dollars to pay it. And so he had to opt for a term insurance plan that would only last to his mid-80s. But if he lives a long life and he's otherwise healthy, that term insurance plan will cancel. And so it's a temporary solution to a permanent problem. The better choice would have been to get a permanent plan, but as many people over 70 understand, you're on a fixed income, you survive in accordance to how your budget is and what savings you've accumulated, and it may be an imprudent decision to spend more if you're only going to make so much. So term insurance was a compromise. It's certainly better than nothing, but this is one of those things where you really have to think hard if a term insurance plan is appropriate or not, because it certainly might not be. Because if you really need it for your spouse and their life will be dramatically changed, it may be more sensible to have a permanent plan in place to protect. The other thing with term insurance is that term insurance is historically more difficult to get approved for, especially as you get into your 70s. Look, it's not that you cannot get approved for it. It's just the underwriting is very tough. And as age advances anyway, people tend to have more health issues. So with that said, I cannot say for sure if one person will qualify or not until I talk to them and get an idea of what their health history is like. But sometimes if you're a senior over 70, or if you're looking for life insurance for a senior over 70, and if they've had health problems, it may be more difficult to qualify for quality term insurance. Now let's talk about another kind of policy that's out there. It's called universal life insurance for seniors over 70. So universal life has a couple of different names. You'll hear people refer to it as flexible premium life insurance, or also adjustable premium life insurance. And basically what it is it's kind of like a hybrid between permanent life insurance and term insurance. One of the biggest advantages is that you can dictate how long the policy lasts, whether it lasts to 80, 90, 100, 121. So it's like term in that sense. And the other benefit is that you're not locked in to a particular premium. So if you have a bad month financially, you can't afford the premium, you can actually pay less into the policy. So that's an adjustable premium contract. Beyond that, it is a product that has a lot of moving parts that, if done incorrectly, can severely damage and put an insured person who's depending on this policy to pay a death benefit, it can put them in a bad financial position, or at least their loved ones, with unexpected rate increases and coverage that may cancel, not because they've outlived it, but because they can't afford it. So let's talk about the pros first till we kind of open that can of worms on the cons. When a universal life plan is appropriately designed, it can provide substantial coverage over a predetermined amount of time and can give more coverage per dollar of premium than whole life insurance. Now, case in point, I have a couple that explicitly wants the most coverage death benefit that they can get. They're in very good shape health-wise. They don't care about having cash value in the life insurance policy to borrow from, and they want to make sure and ensure that their life insurance policy lasts no matter what length of time they live, and there's no way that they could cancel it. So what I proposed to them was what's called a no-lapse universal life policy. The idea is very simple. It provides the most permanent protection for the least amount per month, assuming they could qualify for it. As long as they pay that premium, then the contract for the life insurance guarantees that that premium will never go up. You see, a lot of universal life plans designed in the 80s, in the 70s, and the 90s, what they did was they designed them so low in price because the agent can show you whatever price they want with universal life, but then also imply that it will last forever. What happens is, as you get older, it costs more to keep that policy in check and in force. And so if the policy premium doesn't go up, as the age increases, eventually those policies do what we call they crash and burn. The cash values go down because those are used to support keeping the policy in force. And ultimately the price goes through the roof, and a lot of people are shocked because they've kept these universal life plans for 20 plus years. They're in their 60s and 70s now, and they have to let them go, and they're very angry, understandably. And all of this is because it was a poorly designed product. And so it takes a lot of consideration and carefulness to make a universal life plan work appropriately. If we ever do anything like that with a client of mine, I make sure they understand this, that you have to get this particular kind of plan if you want to make sure none of these bad things happen. And as long as that's understood and followed, then it's something that can be a great plan to use. But it's just like any life insurance. It all comes down to what your particular goals are, what you're comfortable with, what you're not comfortable with, and figuring out what's right for you. So let's talk about some of the cons. So just like I said, you can design a plan. I really have already explained this con. It can really end up being like a term insurance plan. It's good for a number of years, but then the cost of keeping it in force goes up, thus the price must go up. So if you've had a universal life plan for 20 plus years, or adjustable premium or flexible premium life insurance, and you haven't had it looked at, it would be a very good idea have someone like myself take a look at it, and I can tell you pretty quickly what you're looking towards and if you should be concerned, because what you don't want to be is caught flat-footed. You don't want to be caught in a position where you cannot actually get approved for any coverage because your health has changed, you've had a health event, and it becomes more difficult, if impossible, to get coverage. And you want to take care of this problem, this landmine, before it manifests itself into a real problem where you can't get insurance and you're in big trouble. So yeah, case study. I can't tell you the number of cases I have seen where there is a universal life policy inappropriately designed. Again, these are usually ones that were done 20, 30 years ago, 90s and 80s specifically. I actually met someone in my neighborhood where I live, and they were in their late 70s, and they were getting these price increases unexpectedly. And the gentleman had really bad rheumatoid arthritis. He had to have assistance in doing activities of daily living, a walker to get around, physically just exhausted all the time. And there was no way that I could ever match the premium, even with the prices going up, that he was paying. Plus, because his health was so bad, there were some other issues as well. The best I could do is get him a 2-year waiting period. And it's very hard to take something out like that when he is fully covered with that kind of plan, albeit it's going up in price and maybe not be able to afford it. So bottom line, be very careful with universal life. Make sure you work very closely and understand how they work before jumping in and buying one. Now let's talk about whole life insurance for seniors over 70. So whole life insurance is the classic or traditional type of life insurance plan that's been sold for a very, very long time. So whole life insurance is permanent protection with a level premium. And all that means is that you cannot outlive the coverage as long as you pay for it, and the premium is fixed. You have to pay the same price every month. The same premium can't go up or down. But you can never have a price increase, future price increase down the line, as long as you keep up with the premiums and keep the policy in force. Again, you cannot be canceled due to age. Premiums cannot increase for any reason. And the bottom line is that whole life insurance it's also called ordinary life insurance or straight life insurance. You may have heard of it like that. It's just a no-hassle way of having insurance and knowing exactly what you have and knowing it can't go away because you get too old or your health changes. So let's talk about some pros with the whole life insurance policy. So I believe whole life insurance is perfect for funeral expenses or any permanent expense that must be paid upon passing. Whole life insurance is usually available in smaller increments than term or universal life, which is great because if your only goal is to have enough as a senior over 70 to just bury you, you really just need 10 or 15,000 on average. You don't necessarily, you can get more than you want than that, but if you just want enough to do the job, 10 to 15,000 is an average average death benefit amount that these whole life insurance plans are offered to for seniors over 70. Also, there's more options for easier qualifying if health isn't great. Now, this is important too. You may be a senior over 70 looking for life insurance or burial insurance, and you have diabetes, cancer, heart history. There's things in your health past that you may doubt will allow you to get a good quality coverage. Well, with whole life insurance, we have access to what's called simplified issue whole life. And the idea behind that is that it will take people who have not the greatest health. I've gotten people approved for coverage that have had COPD. I've gotten people approved for coverage that have diabetes, that take insulin, that have mental health problems, that have all sorts of cardiac health history issues. Basically, there's a lot of people who think they can't qualify but are shocked to find out they can. Again, I can't tell you if you can or can't qualify until I actually speak with you, but this is just to give you an example that whole life insurance products available for seniors over 70 are much more flexible on average than a lot of other products. The biggest con, I think, with whole life insurance is that it's the least bang for your buck option. When we look at rates and prices, if you start to compare, say, a term insurance to universal to whole life, you'll see you're going to get a lot more coverage with term than you will with whole life. And you may ask yourself, well, why would I pay so much for so little coverage? Well, the biggest thing is that whole life insurance is primarily used when you have to have coverage regardless of when your death is. Term insurance is designed to be temporary. It goes away at a certain point or goes up so expensively that you can't afford it. Whereas whole life is like a guarantee. It's essentially what it is. You pay the premium, you have coverage, rates never go up, cannot be canceled. Term insurance, you pay the premium, but if you outlive it, too bad, and we keep your money. So again, anything you buy that has these kind of guarantees written into any kind of contract, or anything you buy that has guarantees, it's going to cost you more. It's just how the market works, and certainly how life insurance works. So again, it just depends on your circumstances and what you need the insurance for to select which one of these would be the best choice. Okay, so let's answer the question, how much life insurance can you get as a senior over 70? So first thing, you can purchase as much or as little coverage as an insurance company allows. So I've seen people who literally just buy a $1,000 policy. They just want a direct cremation plan. It's very cheap. They just want to have a designated plan so they don't have to dig in the cash to pay for the policy. So you can get that low. I've seen policies for seniors where they're literally in the millions because they have an estate problem and they need a policy to pay off any estate taxes and anything associated with expenses that a policy would be better to do because it provides the liquidity to do so. So look, 1,000, multiple millions, you can see you can get whatever it is that you want for whatever it is that you want to accomplish. So, and that's what it comes down to, right? So my clients purchase the coverage that matches their needs and their budget. Both are very important, and the kind of saying we have in this business is that the policy that stays is a policy that pays. So my obsession as an agent, especially dealing with people on a fixed income, is to make sure whatever you buy for me, you're going to keep. We wouldn't want to lose it because your budget just got out of whack or you spent too much and you bought too much. It's just a waste of your money. I want you to buy this thing, forget about it, and then use it when the day comes that you pass away. Any other kind of insurance is kind of a waste of money if you ask me. So it comes down to, again, analyze your life insurance goals. What obligations do you actually want covered? What financial problems will be there when you pass away that have to be taken care of? Those are a good starting point as finding an indication as to why you need life insurance and how much. Analyze your budget. What can you comfortably afford? Again, I say comfortably afford because you don't want to sacrifice your lifestyle around a life insurance payment. You want to make sure it's easily affordable, it's something you can fit in your budget, and is good enough to do the job too. And then lastly, you got to find a company and agent that meets your needs. That's obviously the next point. Now, how to find affordable life insurance coverage for seniors over 70. So, first of all, as I mentioned previously, find the plan that's comfortable for your budget. That's the most crucial element. And not all companies or agents are in a position to provide more competitively priced options. So what I'm going to do here is actually describe to you a couple of different situations of different kinds of agents and what they will offer you and what their pros and cons are with working with those particular types of agents. So the first thing we got is captive agents. And to really summarize this section, a captive agent is held in captivity by one company. So for you, the client, this is why you should care, they're only going to offer you one kind of product. They're not going to be able to offer you different products from different types of insurance companies. So where's the problem? Well, that particular product may not be the best priced. It may not give you the best value of coverage. It may have more onerous underwriting, so it makes it harder for you to qualify. So these are things that prevent you from getting the best value for what you can afford. The opposite of that is an independent agent. I'm an independent agent. What I do that's different from captive agents is I shop around to see what's out in the market and figure out who's going to give you the best combination of pricing and value and quality. So that way, you make sure that you've got hopefully the best plan that you can find. So an independent agent's not married to one company. We go out in the market and basically make them fight themselves. We say, hey, we got this client with X, Y, and Z. You guys tell me what you want and what you'll take for it, and the lowest price point with the best quality wins. And so that way, in many cases, we can get more coverage on the books for my clients, or we can get a better price if they just want an X amount or a certain amount of coverage. Anyways, I recommend working with independent agents, generally speaking, in the life insurance business. That's why I do what I do as an independent agent, because I value my clients. I serve them first and want to make sure they get the best value for what they can afford. So let's look at some life insurance rates and carriers examples for seniors over 70. We're going to look at term life, universal life, and whole life. And I'm just going to pull some quick numbers on a male and female 65-year-old. Actually, I'll take that back. I'll put it down as 70 years old. Non-smoker, preferred plus health. So just some basics here. We're not going to go a year-by-year analysis, but I just want to show you for the goal of comparing pricing between term, universal, and whole life, so you can kind of see the difference. And as I show them, I'll explain again why one would go this way versus another and health considerations and that kind of thing. So hold tight for me and I'll pull that up and we'll get started. Okay, so what you're looking at here is the quoter software on my website. We've got a 70-year-old, so born in 48, year 2018, male, non-smoker, preferred plus, and we're just looking at some basic prices here. So we're just looking at approximately $100,000 in coverage for 10 years. And this is term insurance. So again, this is a situation where maybe there's a temporary need for coverage, or you just want to get the most coverage for the least amount. You don't care, you might outlive it. So we're looking at somewhere between roughly upper 70s to lower 90s in a preferred health basis. Of course, we can do more than 10 years in some circumstances, but this, again, just a basic starting point. Now we're looking at a 70-year-old female non-smoker. We're looking at $100,000 in coverage for 10 years for a term insurance plan. Again, low 50s, mid 50s to mid 60s for a preferred plus basis. Okay, so what you're looking at here is some universal life plans that are designed to stay in force until age 121. So these are effectively permanent coverage. But you're looking at Sagicor, usually is what I do my business with a no-lapse universal life plan. And this is an annual premium, but to give you a rough estimate, about $2,000 a year broken down on a monthly basis is roughly about $160 to $170 a month. So that would be for a male who is 70 years old for $50,000 in permanent protection through a universal life plan with no lapse guaranteed. So second here, we're looking at a 70-year-old non-smoker female preferred for a no lapse universal life guaranteed plan. Again, Sagicor has really good rates. You're looking at approximately about $130 to $145 a month on a monthly basis for this particular type of plan. And again, this is when you need the most death protection you can get. And you don't care about cash values or possibly taking a loan from your policy. You just want to leave the most behind to your beneficiary. Sagicor is a really good option for that kind of coverage. And now we're looking at a $25,000 benefit for a male 70 years old non-smoker for whole life insurance coverage. And you can see there's a pretty big price increase. It's almost the same price for $25,000 for many of these companies as it is for $50,000 through Sagicor. So again, the reason we look at this particular type of plan is usually because of health issues. It's a better flexibility here, but $150 to $175 is what you're looking at for a whole life simplified issue for a male 70 years old non-smoker. And then for a female, $25,000, age 70, non-smoker, whole life insurance premiums, you're looking at about $108, $110 to $130. Again, depending on the company, depending on the underwriting. Again, same situation here, much less expensive relative to double the coverage for a no-lapse universal life guaranteed program. So bottom line, people go with this because health is just not the greatest. And we can go lower than $25,000. Remember, we can go down to even $1,000 in some circumstances, although most people get $10,000 to $15,000. So when looking at these rates, you may be wondering to yourself, is it wise to get the cheapest thing available? Should I just go for price and get, say, the term insurance plan? It gives you $100,000 and maybe only pay $60, $70 a month if I can qualify for preferred rates. So here's the thing. I want to kind of change your mindset and the language you use and to better analyze how you look at life insurance. Here's my opinion. Instead of cheap, think most affordable, in addition to best matching your goals. Now, I'll agree with you in that context. As long as a product matches your goals, definitely find the one that's going to be the best overall value. It's going to give you the best deal. That's what you want to do. But what you don't want to do is just think price and see nothing other than price. If you just saw $70 a month out of those options and it was the least and most coverage, but you didn't even really consider the length of time that it lasts, what if you outlive it? You've just wasted a lot of money, potentially, if it did not match the goal you're trying to accomplish. So don't get mired down in being cheap for the sake of being cheap. You certainly want a competitive price, but make sure first the insurance policy actually accomplishes your goals. Price is not everything, But at the same time, if you can only afford so much a month, you may have to make an exception. Certainly not everything is black and white. There are gray areas in decisions we make in life. Certainly is not any different from life insurance. If you are budget restricted and cannot spend the amount that you want, that you ultimately would like, then meet in the middle, maybe get less coverage or possibly get a longer term insurance plan or do some kind of combination of the above where you get a different plan or same plan and less coverage or to make it less premium and come up with some kind of solution, a compromise that will get you some of the goals versus none at all. So let's talk about how to qualify for life insurance being a senior over 70 years old. So there's several important steps in the qualification process in getting life insurance for seniors over 70. So as we ended a couple slides ago, you want to find an agent or a company that you can trust. Somebody that understands really well what you're trying to accomplish. They take time to listen to your concerns, take time so you can express what you want to accomplish, and they come back with consultative solutions that match your goals. If you feel good about somebody, an agent like that, that next step is to complete the application. Again, you're just applying for coverage to see if you can qualify for it. And then make sure you complete any supplementary underwriting requirements. This can be as little as just signing off and then they'll do everything at the home office, or it can be an involved process where there's a short phone interview or a full examination. It just depends on some of the variables. We'll cover that momentarily. And then you got to wait after that. It usually takes from several days to several weeks, even months at times. Again, it just depends on the complexity and the size and scope of what it is you're trying to accomplish. The smaller policies usually are faster than the larger ones. And then ultimately you will receive your underwriting decision as to which direction you're going to go for the coverage that you're going to get. So this brings up another question I get a lot of people asking me. Should a senior over 70 get an exam while applying for life insurance? Maybe you asking this question because you don't like the idea of getting poked and prodded or peeing in a bottle and doing all that stuff, and you'd rather avoid it. So what I'm going to tell you is kind of what an exam involves and what under circumstances you can get one and ones you wouldn't. So exams typically include specimen collection of blood, urine, and usually a doctor or a nurse conducts a physical where they ask you a series of health questions just like in a normal physical with your primary physician. So the pros of doing an exam is that for healthy people, it usually allows for more competitive premium pricing, generally speaking. So if I have somebody who is applying for a lot of coverage, there are plans where maybe it's a $100,000 term insurance plan. There are simplified issue plans where there's no exam, and there are fully underwritten policies that require an exam. Usually, if the person's in really good shape, the fully underwritten exam with the exam policy is going to be a better price than the one without it. The reason being is that insurance companies only have so much data to collect to make an underwriting decision if they don't do an examination. Whereas if they do an examination, they get up-to-date current information on everything associated and everything that can be found out through a urinalysis and a blood exam. So it's really important, again, that if you're in healthy shape, I recommend getting an exam if it's something that is an option because it usually results in a better deal altogether. And one other thing, it may be the only way to get a larger amount of policy or a larger amount of coverage, for example. The reason I say that is because a lot of these larger plans, as you get into the six figures, especially if you're over 70, require an examination. They require you to take steps to go through a physical process because of your age, let's face it. And so the companies want to make doubly sure that they're giving you the best deal or they can actually qualify you and you qualify for them and want to be insured of that. Cons of doing an exam, it's going to extend the process of getting you covered because there's more variables that have to be accounted for. You got to schedule the exam, you got to do the exam. The underwriters have to examine what comes back from the exam. So all that adds time to getting a policy issued. And coverage may come back different than applied for. So you may apply for preferred, but you're only standard. And your rates go up. So again, and that's really true of all insurance. You just don't know until you apply for it. But that's really a con that exists with pretty much any kind of life insurance. So here's the bottom line. An examination is optional most of the time because most people don't get huge, humongous policies that absolutely require it. And many life insurance companies don't necessarily require it either. So, if you want it, great. If not, that's fine. With the exception being for the companies that do want it. I always make it an option to my clients because if it's something that I feel would benefit them as it relates to how much coverage they get for the premium they pay, I'd want an agent to tell me that if I were in their shoes. So I think that's the only right way and right course of action. So let's talk about how to qualify for life insurance for seniors over 70. So first of all, applying is very simple. Pick the agent you want to work with. Again, I always nominate myself. Hopefully you've liked what I've seen so far, and if you want to work with me, that's something I can definitely do. Second, after your agent listens to your insurance needs, let them draw the quote up, apply over the phone or the internet. Longer the days when you require a face-to-face meeting. I deal with people all over the country, from Hawaii to South Carolina, and we all do it electronically or through the mail. And after several days or weeks, your coverage is approved, and then several weeks later, you get your policy and you got your coverage. And then it's your job just to pay it, keep up with it, make sure it's enforced. So final steps here. So if you're interested in qualifying for life insurance, and whether it's final expense, whole life, term insurance, universal life, and you're over 70 years old and you really want to work with somebody who understands this market, visit my website. It's buylifeinsuranceandburial.com. You can request a quote by sending me a message. There's a message box in the contact box at the top, and then at the very bottom you can click a link and send a message that way. Otherwise, call me at 888-626-0439. Leave me a message if you don't get to me, because usually throughout the day I'm talking to people, and I commonly don't catch the phone because it's just me that I work with. I don't have a call center or anything like that. You work directly with me, and I promise to get back to you lickety-split. And if you like what you see, please leave a comment below. Give me a thumbs up. If you found the information useful, make sure you subscribe. And thank you so much for watching. My name again is David Duford at buylifeinsuranceforburial.com. That phone number is 888-626-0439. Thanks for watching.